What's going on, brothers and sisters alike? It's your boy Tyler. We are back at it for another AMC update video, and this one is very important. Just like we called out in the last video yesterday, this $33 support range would be a solid support level, and I did expect a bounce, which is exactly what we are seeing today, closing regular trading up 7.69% and after hours up 7.36%. So I think it's very important to pay attention to the technical analysis, but a bigger portion of this video, I do want to talk about the new failure to deliver numbers that were just reported for the second half of June that are very important to understand exactly what is going on here, because this is indicating that we are having a lot of naked short selling that is going on. I will be giving you guys my opinion on this, as well as cover what synthetic shorting is and why I think this is going on as well. Also go over the Ortex data, like I said, give you guys everything you need to know, touch on the Fintel data, let you guys know what institutions and hedge funds are doing with their AMC long positions and their short positions. So without any further ado, let's jump into this video. Hit that like button for me, consider subscribing to the channel as well. And first things first, like we pointed out in yesterday's video, I did think we were going to have that solid support level at $33 per share. I said you could go under that, but odds are we would bounce at this $33 price point. And my reasoning for that is very straightforward and simple. So I will give you guys that to you right now if you did miss that video. And from the sentiment that I was seeing, pretty much all apes, or from what I seen at least, they are buying the dip and holding on to their entire position. I didn't have one single comment that said, somebody said fuck AMC, but nobody said they were selling AMC. The sentiment around this was very strong. We had zero negative catalysts, nothing about the business that would actually push the stock price down. So in all, I did say that I think there's a lot of naked shorting going on, as well as synthetic short positions. And the key point to know about that is, yes, we do know this is happening. Once we get into the failure to delivers, this will kind of confirm what I have been saying on this channel. But these short sellers in AMC stock, hedge funds, institutions that are taking these short positions, they don't want to dig themselves into a huge hole and go back onto that threshold securities list. So my theory behind this, to see such a hard sell-off when apes are not selling, is the fact they're taking on these naked short positions in a very fast time frame. So they're only doing this within 1 or 2 days, because to go to an actual failure to deliver, that is T+3 settlement time. So if they did this every single day, basically scalping on the way down, flooding the market with this supply and essentially bring the price down, because supply and demand bring the price down, and actually covering their naked shorted shares within the same day at a lower price point and keeping the spread or the difference between those. So that is essentially what I did see is going on, as well as just the strong support level that we did see at that $33 price point. And the overall fundamental business of AMC stock is getting much better, and from my calculations, I would value AMC at about $20 per share based off of its current revenue, the numbers they are projected to keep doing going into the future, the blockbuster films that are in their theaters, they are branching out into UFC fights. All of this put together, if you hold AMC in between 1 and 5 years, you could make a justifiable valuation that AMC is worth about $20 per share. So with all this positive momentum, to go back down to its fundamental price, I don't think that was going to happen, and that is pretty much what I called out. That there's more to that, but that is in a nutshell why I did think you'd bounce at about $33 per share. But let's get into the technical analysis a little bit more. Obviously, we did see this strong bounce. The next level we're gonna obviously have to break out to is about $40 per share. If we get that strong break, then I think we're looking very good after that. I think that'll turn out to be a solid support level, because like I said, a lot of these options contracts were actually exercised by apes that are holding onto their shares at this $40 strike price. So I think this is going to be a solid support level. But when we pull it out to the 15-minute candlestick chart, you guys can see we actually have a golden cross starting to form. So if we get another positive day tomorrow, which it does look like we will get after the after hours move that we are seeing right now, we should see this 50-day moving average go above the 200-day moving average, which is a golden cross, and it sends a signal to algorithmic trading programs to start bidding up the stock and to provide that liquidity at an even higher price point, because we all do know in between 70 and 80% of all retail order flows are to companies like Citadel, big market makers. So they have the ultimate impact with their trading algorithms, how high, how fast we do go. Obviously buying the stock does help, but if what I do think is true, and they are just manipulating the bid prices, it won't matter too much until we do get those algorithmic trading platforms on our side. So obviously, if we do get that bounce tomorrow, we'll go into this golden cross type movement, and then we should see a lot of algorithmic trading start to boost up the stock price. So that is a huge thing that I'm watching right now. As far as the MACD, we are obviously very bullish, starting to curl down a little bit right now. That is because the lack of volume you do typically see in after hours trading. But just to take a look at the overall volume, guys, this was incredible for the day. 190 million for volume. And obviously over the past 5 trading days, we've seen the stock price go down a lot, but we have seen this volume pick up every single day. 5 trading days ago at 57 million in volume, then 62 million, then 84 million, 135 million, and now 190 million, and we are seeing this huge price action for the day. So if we do get, I believe, over 200 million in volume for tomorrow, we should see a great closeout to the end of the week, possibly even go back up to close to $50 per share. That would be a move of about $12, about 25%. So I do think that's possible. I wouldn't count on that. I wouldn't be making any trades about that. I'm not a financial advisor, not a financial planner or your dad, so don't make any trades based off of what I say, but that is kind of what I am thinking here. Now let's briefly go over this Fintel data, which is giving us the 13F filings from these hedge funds and institutions and what they are doing with AMC stock. So just for today, yesterday and today, July 14th and July 15th, we did see 6 hedge funds and institutions actually adding to their positions. Not too many shares here, about 15,000 in total, but you only seen 3 hedge funds and institutions actually sell out 100% of their positions. So I think the overall sentiment here, as far as going long on AMC stock, is still very much intact. But the other thing that I do want to point out is the majorly large long positions in AMC stock. They are still keeping their positions even after this rally we have seen. So this will be very important once all these filings do come out. But from the preliminary data that we can see on Fintel, the people that do have millions of shares in AMC stock are still in this and they have not sold out yet. So that is what is important. I do want to let you guys know about the Fintel data. Now let's get into the Ortex data briefly and then talk about the failure to delivers more in depth. And for today, short interchange of positive 0.4%, return shares 933.11 thousand, borrowed shares 1.34 million. So they're saying we did have 408.09 thousand shares that were actually sold short for the day. Current short interest percentage of free flow at 15.89%. Current shares that are sold short of 81.29 million. Take this data with a grain of salt. They were just very wrong on their calculations, saying AMC was about 20% shorted. Now they're saying about 16% shorted, so take this information with a grain of salt. I do think the actual numbers are much higher here. But as far as the Ortex data, the last thing that I want to talk about is the share utilization, which is currently at 92.42%. 7 days ago was at 89.92%, and the share price has been going down. So what this is telling you, there is less shares that brokerages are actually willing to let hedge funds and institutions sell short, which is ultimately giving us a glimpse into what the brokerages think will happen with AMC stock. And it is quite simple. They do not want to be on the back end of hedge funds and institutions not being able to cover these short positions, ultimately screwing the guys that lent them these shares. So I think they think AMC is going much higher and there is just too much risk to let them partake in short selling AMC stock. So that is pretty much all you guys need to know as far as the Ortex data. Now I do want to go over the Ftd'S, the failure to delivers Ortex. It does have them posted right here, but I do like the way the SEC does break this down in a more in-depth, precise way. And the first thing that I want to point out is this is a running aggregate number. So this is not per day, in between 4 and 4.5 million shares that were failed to deliver. This is a running aggregate numbers. But another way these Ftd'S do occur is from the options market. When you are buying a call at, let's say, the $40 strike, which a lot of people did buy those calls, me myself included. When you are buying those, you are agreeing to buy 100 shares at $40 per share if by your expiration date AMC is over $40 per share. Now on the other end of that, there's not always somebody like you and me willing to sell you 100 shares at that strike price. So that is where market makers come in and help keep the options market liquid, so you can always go in there and buy a call, buy a put. That is just how it works. Now you get the Ftd'S when the shares are hard to acquire or there is very little shares. So what I am seeing as far as the failure to delivers, we really did see this spike the day before our biggest ever options expiration date, which was June 18th. Like I said, I think most of this was from naked shorting. Maybe about 10% was from the options market, but we're seeing this direct correlation on June 17th when we did jump up to about 2.5 million failure to delivers from about 15,000 only June 16th. So I do think about 10% of these were from the actual options chain, but I do think because this was the time AMC did start to actually go down and we did actually shoot up after this, June 10th was our lower point at $42.81. I do think they took this opportunity to initiate a lot of these naked short positions. So I do think naked shorting is still running rampant with AMC stock, but to keep in mind, we don't have the accurate up-to-date numbers for this. This is about 2 weeks delayed, so we will not see what is going on right now till about 2 weeks out. So once we get that information, that will give us a better picture here, but this is already painting a pretty clear picture, and the fact that these failure to delivers consistently stayed in between 4 million and 4.5 million, the stock was not all that hard to acquire after the actual short squeeze. Obviously there's a lot of people buying the stock, so at that point it was hard to acquire shares, but to see this running out for so long, which we have not seen throughout any short squeezes or any time in history, this is showing you there was a lot of naked shorting that is going on, and the stock overall was very hard to get. But all in all, these shares will have to be bought back at some point in the future, which is just another element that is going to cause the AMC mother of all short squeezes. So that is all I have for this video. If you guys like the information that was provided to you in the video, hit that like button and consider subscribing to the channel, as well as let me know down below in the comment section, are you excited for AMC? What is your plans to do with your position? Are you willing to take profits at a certain price? Are you just buying the dip, waiting for all the shorts to cover? Let me know that information in the comment section, as well as if you guys want to get free stock, check out the link down below in the description. There is a link for public, no deposit necessary, no need to link a bank account. You get your free stock in about 3 minutes time, and they also do not route your order flows to companies like Ftd'S, so you can also help the movement in that way if you guys want to. And if you guys are not signed up with Webull, deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece with Webull, and that is a great brokerage as well. Both of them are, you actually have a setting in Webull where you can turn off the availability for Webull to actually sell your shares to other hedge funds or institutions, or loan them out, I should say, as well as if you guys want to start winning on your options trades, check that link out in the description as well for the buy and sell alerts. Join a great community for a very inexpensive cost and start winning on your trades. But with that being said, I will see you guys in the next video.